day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 1st of October, 2022, and this is the technical analysis for the Euro, the cable, and the Aussie dollar for the first week of October. And just an overview across all these major pairs, after a significant bearish move with the US dollar strengthening, there has been some recovery and retracement back up for the euro, the cable, and except for the Aussie dollar, it attempted to recover but failed and fell back on the Friday. So we'll see if there will be further continuation recovery, retracement, or just return to retest the breakdown, and we'll see whether there's any opportunity to resume its bearish move, as the US dollar could recover back up as well after a retracement, after a pause and a retracement lower. All right, and for the case of the cable, you can see that there was a very significant bearish move, which we'll cover later on. And there was some intervention on Wednesday as well, which helped to boost its recovery. But let's begin with the euro. And from the start of the week, it has already continued its way lower below the 97 round figure. Dipped down lower on the Monday and then paused on the Tuesday before finally hitting the 200 pip extension of this swing move, reversal move. And after hitting that, it had made a strong recovery, retracement back up all the way back to the 138 pip. Resumed through the week until it almost tested the swing low at the 100 pip here. So almost climbed its way back up. So a strong recovery there. Let's mark this. So 162 will be an intermediate support. Swing low is still resistance up here, and the next key resistance at the 786. So let's also mark the 96 level. Did dip down below to the just below the 96. And the 200 pip extension is just above 95 down here. So that's the key support level here at 95, but 200 pip was just above that at 95.30, so that stopped that drop further. Okay. So this is the key swing low here now. And we could also, to trade this, you can actually take the swing move down and trade the retracement. So you can actually take this swing move down from the drop, and you can see that it has retraced back into the 62 pip retracement. On the Wednesday itself, that recovery, it already shot back up to 38 and then continue on to the 50 pip, which is right at the 98 round figure, before finally reaching the 62 pip on Friday, and then pause to close at a spinning top as there was slightly higher PCE data indicating that the inflation is still around and not going away yet. Okay. And this week, there's the US non-farm payroll report on the Friday that could impact US dollar and also the major pairs. And along with that, before that, there's the minutes from the recent ECB meeting and on their policy and rate decisions. Okay, so this week, we'll see if it's able to break out from this range between the 162 and the swing low 100 pip here, which is still a fairly wide range from the 9650 area. So that's already about 200 pips. Let's also take a look at the weekly time frame. There's a strong bullish move to recover. All right, let's compare this with the US dollar index, the DXY, to see if the US dollar did retrace lower in an inverse correlation with the euro here. And here's the US dollar index, the DXY. Let's expand this slightly, and you can see that it started the week straight away to hit the resistance zone up to the 162 pip extension and spike through the 114. Pause on the Tuesday, but then on the Wednesday, I did attempt to initially to climb up higher, but then quickly was rejected and strong retracement back down, all the way back down to the 112 level. So that's this swing move down is already about 260, 270 pips. So it was expected retracement since it's already hit at an overvalued, overbought level. And then on Friday, it did manage to recover somewhat with the US PCE index and settle around the 112 area. So this would be an interim levels at the 138 pip extension. Key resistance zone is still up at the 162 pip. And then the support is going to be at this swing high previous swing high here at the 110.50. So that will be actually a significant support now. And of course, well below that is the next fib level at 78.6 and next to the 109 round figure. So it does correlate inversely with the spot gold reaction, where spot gold did dip lower and then turn around and retrace back up. So similarly, the DXY did the same as well and retraced lower. So now we'll see if it will try to retest the resistance zone, or whether it's able to get past the 138. And if it's able to find support just above the previous swing high at the 100 fib, so just at the 111, or whether it's going to dip a bit lower and retrace further into the swing high area to retest that. It could try to pull back all the way to retest that area. Let's also check this. We can check the retracement here, and it's retrace into the 38 fib. 50 fib will be at the 111, so that will be next possible target. And if it does attempt to retest the swing high, then it could reach the 62 fib retracement. So that's also possible if it retraces a bit deeper. Okay. All right, so this coming week, the only key trigger will be the Friday's non-farm payroll report. That may create the volatility. So meanwhile, looks like it could just consolidate between the 138 and the 100 fib. We'll see if it's able to dip below the 111. Okay. All right, so let's move back to the other major pairs. Let's move on to the cable, where it has suffered the worst level for 37 or 38 years against the US dollar, the lowest level since then. And after Friday's bearish close, there was a significant further drop early on the Monday of the Asian trading session, and it dipped right into as low as the 103, 103.60 area before recovering and climbing back up. So that was, well, the range for the day was already 500 over pips, and the recovery back up was about 300 pips. Pause on the Tuesday, which is still a significant range by itself of about 170 pips. And then on the Wednesday, initially, it was attempting to climb up higher, but there was some intervention by the Bank of England during the London session, where they bought bonds, bought up some of bonds as a attempt to pump in liquidity into the market, and similar to quantitative easing effect, QE. So it did attempt to climb up higher, but it dipped lower first before it bounced back up. And that was a strong rebound here, over 300 over pips, and a continuation move on Thursday and then on the Friday as well. So similar to the euro, you could also trade the retracement from this swing move down, and look at that, it recovered back up to the 62 pip retracement as well. And initial recovery was to sit above the 21 pip before pushing up to the 38 pip, and then the 50, and then the 62. So that was the cable here. So let's see if it's able to recover further this week. The resistance zone is still up here, back up to the swing low, and further up at the 78.6 with the daily 55 falling lower. On 62 fib area along with the round figure is still the support, and then the 200 fib along with the 105 round figure, that's the major support level now. Right, so there could be still some more possible recovery to reach the resistance zone for some consolidation between the 100 and the 162 fib. Okay. There's no major news from the UK this week, and so it's also exposed to the non-farm payroll report. Let's move on to the Aussie dollar. Where it also started lower at the beginning of the week and reached the 162 fib extension before spiking lower and pushing back up to the 65 level, back up to the 138 fib extension. But here there's the difference with the euro and the cable, where on Friday it did weaken again to fall back into the support level. So it has gone back to retest the support. And let's move this now to next round figure at 66 as the interim resistance. And with the key resistance at the 67, right near the swing low area. So now if the Aussie dollar is going to weaken further, there could be, and with the RBA having their meeting to decide on the rate increase, another 50 basis points to 2.85%. So that could impact the Aussie dollar as well. It could drive it lower as it's still playing catch up against the US dollar. So this is at 63. Then further down at the 200 pip is at the 62.30 area. So let's mark this as the next major support. So for the weekly, Aussie dollar still looks still weak, and with potential further bearish movement this coming week. And it's also exposed to the non-farm payroll report from the US, so it's going to be quite volatile for this week. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.